Welcome to Trading Lounge and the European indices for Monday, January the 31st. The DAX here is an alternative count. I just thought I'd pop that in there. And let's move on to, also got another alternative count here too, which is just 1 degree smaller. And the reason for having this particular count by the by is that the length of wave 1 here, in this my little yardstick here, still leaves the wave 3 here that we're looking for a bit shorter. So yeah, just keeping an eye on this count. So still looking for a longer third wave. It doesn't have to be that way. If this wave 3 here is going to be shorter than wave 1, that's going to leave wave 5 over here shorter than wave 3. Okay, so we'll get to that when we get to that, but just keeping an eye on various counts. So our main count here is looking at wave 3 here with wave 3 with an A wave, a B wave and a C wave coming into play here. Now this wave 4 is getting a bit complicated, so we need to go in and check on that on the intraday basis. Wave 4s tend to be a little bit sort of complicated, so yeah, we've got that. But one of the important points here is that this particular move up through here is a corrective move, so it should make the rest of this corrective, but we'll just need to be a little bit mindful of things. So we're looking for a move just a little bit higher here before we see a move lower. So from B to C here, we're looking at 1, 2, 3, 4 and 5, so we need to look at that a little bit closer on the hourly chart for this. So let's just go in and do that. You know, we also really need to understand that, well, can we have a different count in play as well? Well, that's possible, but in that case what I wanted to do was that if we look at wave 3 here with an A, B, C here for this, so we need to remove that little I there, that we're not talking about AI, but this is quite clearly a 3-wave pattern here, so that makes the rest of this corrective. This move down through here is corrective. We've got this as 5 waves up here for a C wave, and this move here is also corrective, a nice little A, B and C wave here. That means that we'll be taking the top out here, so that means I'm just sort of taking those couple of highs here, and we should be looking for 5 waves up here. Now if I'm completely wrong here and the market is in a bullish move, then we would wait for these 5 waves to finish off, and then we would have an ABC pattern pulling back, and then we would push up further. And if that is the case, then we'll be looking to go long above this B wave high, which could be lower, and we can get a better position on that. But in the meantime, we're just looking for this to push up based on this move here that's corrective, and once that occurs, then we can look at the market retesting this level and having one more move down. So is it possible to have this as a low? Well, then we would need to look at it as a slightly different pattern. I did have it somewhere here, just let me have a look. No, it's not here. Maybe it's on the not to worry, but we could look at it, maybe we'll look at it on the STOXX 50, but in a nutshell, we can look at this move over here. If we do push up higher, then we would have to look at this as a wave Y here with a wave 4 here. That's the only other way that it could play out at this particular point. But I'm not going to go there yet unless we get the this level here, the 15,500 as the support at this point. So yeah, so that's the DAX really. So we can expect it to push up, like we're expecting the Asian markets to push up in the Asian session for this, the S&P to push up in that regard as well. So let's just see how this unfolds. So day traders can look to the upside, position traders need to wait for the setup here, either long or short over here for this. Alrighty, let's have a look at the STOXX 50. So okay, we've got the STOXX 50 count here, so we could look at this as the alternative wave 3 here. Instead of an A, B and C wave that we're looking for over here, we can look at it as a W, an X and a Y over here for wave 4. So I should just dull those out a little bit, so that will just tell us that they're an alternative count sitting in the background at that particular point in time, and that's all good. And yeah, so we're looking for the same Same thing here as well in the stock 50 as the DAX. So we can put this over here, and this wave 3 down here. I'll just move these out of the way here. And look, once again, here we can look at, we don't want wave 4 overlapping wave 1 at that point. And we can see that this move here is in 3 waves, the same as the DAX. So we should see this push up here and get that first high above the level. When that first high above the level comes in, then we can look at any long trade setups will come from, you know, going long above this high here. So we'll have to wait a session or two for that. Otherwise, we'll look for the retest here and we'll look for further downside at this point. So we don't want to get trapped here, but short-term traders can build off 41.50 to the upside and take the money off the table at 42 there, because it will be a little bit rough at this point. So it does count quite nicely as an A wave here, B wave here, and a C wave here. We've got 5 waves here, so a nice A wave and a B wave and a C wave. So it's very typical of wave 4 to be you know, complicated, and that's exactly what we're getting. Let's move over to the FTSE and have a little look at the FTSE. So I'm looking at the FTSE in 2 different ways. So one of them is having wave 3 here and wave 4 here. Now that would put that a little bit more advanced than the other markets. And then looking at wave 1 here and 2 here, I don't really see a problem with this particular count. We do need to have a look at a setup here to go long. The other count here, lining it up with the rest of the market, would bring it in at, let's have a look here, it would be having wave 4 over here and being in place. It's not quite with the other market. And we could also bring the FTSE wave 4 over here to finish off with another move down. So like the other markets, you can see this little move here is in 3 waves. So we're going to make a little top here on that. So we could come back down here in this instance here. But in this case here, this little move up through here counts quite nicely as a 5-wave structure of 1, 2, 3, 4, and 5 here. So up for 1, back for 2, and then up for 1 here. This is also corrective coming back. So that would be, so we can expect the market to come out of that top there. So what we can do, if I could just refine this a little bit further to make life a little bit easier. So if this was the case, we can look for, over the next few sessions, we can just look for another little 5 waves up, and then we'll see a nice little ABC back here. And then if the market's going to be bullish, then it needs to prove it to us. So it will need to take out a previous high, so an impulse wave, corrective wave, and then up from that point. Otherwise, it's just going to stay below that high and fade to the downside. So if it does get triggered, we'll be on the long side at that point. Yeah, so that's about it really for the FTSE at that point. So we can look at this in different ways. I mean, currently from the low to here to here to here, that's in 3 waves, but I can see that we've got this as a corrective wave pattern here. So I think we just need a little bit of patience to see what's going on here. And you know, the bearish side, the markets, you know, while considering what's going on in Ukraine and Russia, there's no real clear you know, whatever's going to happen there is going to happen. You know, I don't know, but if Putin doesn't make his move like now, then it's going to be too expensive for him in later days to do what he needs to do with everything there. So you know, I mean, yeah, yeah, he's just got to, you know, if he's got his wits about him, I suppose he'd just act why he's on the winning side at this particular point. You know, it'll be all over in 10 minutes basically for the first stage of it. So if he doesn't strike now, well then Ukraine is going to, you know, build up more resistance, and it's going to be more expensive and more risky at a later date. So look, we could get that move from some event like that, but you know, that's not my expertise. All I can tell you is that this little move here is corrective, and before we can go long, we need one more push up, and then we'll look at the pullback, and then we'll buy the B wave high at that particular point. Now we want to have a look at the euro US dollar. So let's pull that up here. So just on the daily chart here, we've got a very nice 4th wave through here where we traded long up through here, and then we've traded short down to this point here, and then we're also short now at this point here, and we'll hold short until we get down to 1.1 over here or very close to it. This 1.1 is a minor level, and these 3 levels here are sub levels. So Normally in this space it's not really doing it at the moment, but normally when you're moving into group 1, as I call 1, 2 and 3, then it gets a little bit bouncy, and we're not seeing that just yet, but we could certainly get it between 1.11 here and then back to 1.2, so we need to be a little bit careful about that. A trend has got a beginning and a middle and end, as you know, so we've got the beginning here, we've got the middle here, and we're at the end of the middle section, and then we're going to be in the later stages here, and the later stages here are going to be what you see here is not what you get next. You always get the opposite of what you're looking at. So let's go to the 100 ticks and bring in a bit more data. How much do we need? Maybe 20. Okay, that's good. So yes, at the top here, we were long up to here, we got out, we were short here, we exited over here, we got back in over here with a classic trading levels pattern to the downside. So on the downside, that pattern sometimes is nice and neat like this, which it basically was in the first instance, but sometimes you would see that it climbs back above the level here. We always keep our eye on this low and then bring it up to this low and then to this low, and that's pretty much what we've done here with this low here and then to this low and this low in here. Capturing that, leaving the stop out, understanding that we've got a series of 1s and 2s in here, and then we've got the middle of the trend, and now we're going to be in a series of 4s and 5s. Now I may not have this right here just yet. I'll need to tie that in with the US dollar index, where we're also long on that as well, but I can tell you this is going to be a bumpy ride, and what you see here is not what you get next over here. So yeah, we're not even into 1.11 yet, so this is a sub level, and these are micro levels in here, and this is also 1, 2 and 3, and we've got that 3 there as support. So we need this market to sink in here, and when it gets into the pivot number 2 here of group 1, then it will lock in there, and once it locks in there, then group 1 above and group 2 low below will be the swing range for that particular price point. When the lower end group 2 here becomes the resistance, then we'll just drop down into 1.1 at that stage. But there are other levels here, so there'll be 1, 2 and 3 in here, of course, and then there's the midpoint here, so the Fibonacci sequence of 1, 2, 3, 5 and 8 as a price ratio, and that's what we're looking at this stage. So we'll be exiting down here somewhere with all of this, and this may be the low here. I need to sort of resolve that a little bit, otherwise it will be a wave 3 and we'll see a wave 4 and a wave 5 come down, but we're not interested in trading that just yet. We just want to complete our larger impulse wave to the downside here. So this will get messy in here, and I can tell you, do not lose money in wave 4s, okay, because that's where we are. What degree of wave 4 we're in will just be, you know, there's a little bit to understand at this point. So we could also look at this rallying higher as well. So if we take on this wave 4 here, so we can pull back up to there, so we're just going to move that stop out of the way a little bit. We don't need that at the moment. If you find that insulting, we'll then just take some money off the table here, but this can be a little impulse wave up here, so that means that this can grow in size to here before seeing further downside with all of this. So it's going to be a bumpy ride, so hang on to your horse, and we'll see you on the other side. So I'll just grab that and put that here. Let me just have a little look at the US dollar index. I haven't had a look at that. That goes into the commodity video. Okay, so yeah, look, not too bad, a little bit off there, but that can go there, that can go there. We're looking at this pulling back. Don't need that, don't need that. Probably pull that out of the way a little bit. So this wave 4 here, which is a little bit cleaner, we'll take that and that. Yeah, that can pull back down there. See, that's a little impulse wave down here. It might be as simple as an A wave, a B wave and a C wave, and we're finished and we're heading up higher. But you can see the 38.2% retracement level here. So, you know, it can move to this particular point. You know, this can just be the wave A here, an A and a B and a C wave here, and then move down. So I don't know. All I do know is that we don't want to, you know, we don't want to We don't want our ticket clipped at this point. So that can be there or it can be there. I don't know. And it doesn't really matter, you know, whatever happens. If it does come back down here, then you've got yourself a buying opportunity. And that means if you've got yourself a buying opportunity, then you can look at the closest largest number. So we can go to the 97 at that point. So if it drops below the 97 and then finds a nice tested support back on the 97 with a little classic trading levels pattern on the long side, which would look like this, if that's the 97, the arrival, the reaction, the first high above the level, the ABC, and then sitting on the level here, but always work from the high, go along here, here, and then down here. This little tiny pattern in here will be the same fractal as this bigger pattern here. So that means the arrival, the reaction, the first high above the level, and ABC pattern go along above the B wave, and away you go again. Alrighty, thanks for tuning in, much appreciated, cheers.